And welcome back. I'm speaking to Lillian Co, Chief Investment Officer at LBN Advisers. We've been talking about your short book. And as noted, you're about 50-50 short and long at the moment. So the shorts we've covered, and we'll summarize those in a moment. Let's talk about the longs. One of them is Techtronic Industries. Now, this is a very interesting company. It used to be the darling of fund managers. It owns Hoover. It owns Ryobi Power Tools, or it manufactures Ryobi Power Tools. It has Dirt Devil as well. Last year, it lost 80% of its value. I mean, it was a tough year for everyone, but for Techtronic, it was brutal. It's been restructuring. There were concerns over the housing slump, because people don't need their Dirt Devils and Power Tools so much, and also they had debt concerns as well. You clearly think the worst is over.
Yes, I think it is clearly a classic case of a fallen angel that can be re-rated again. The company is having a big earnings turnaround this year, and as the second largest power tool maker in the States, trading at like 5 times P, I think there's definitely room for re-rating for the stock. And the company is not going bankrupt and is now taking market share. So I think there's a lot of room for re-rating for the stock, and that's why it's one of my top picks at the moment. If
there's one big risk I could see on this stock, it would be the fact that the stock price is up 150% year to date already. I mean,
actually, quite a lot of industrials companies have doubled or tripled since their lows in last October. The thing is, the lows you saw previously was really a clear mispricing. People were pricing in bankruptcy risk. So you are just now moving back to a more reasonable valuations. And this stock at 5 times, I still see a room for re-rating. I mean, it used to trade at over 10 times at the peak. Right. So if it gets back to like 6 to 7 times, it gives you like 40–50% upside already.
Right. Well, in fact, the average or the median target price amongst analysts is $5.57. That is a 47% upside from yesterday's close. That PE requires a little bit of explanation, because the 2008 earnings aren't out yet. They're due on, I think, on April 22nd, correct? So it's been a little slow to report. So we're talking about estimated 2009 earnings compared with estimated 2008 earnings, which gives you 5.6. The risk is, though, that Techtronic comes out with a nasty surprise when it reports for 2008.
Well, we'll find out very soon. They're going to report by the end of this month. And we have seen early signs of U.S. housing market stabilizing. So that can potentially serve as another positive catalyst for the stock.
Are you confident about the U.S. housing market?
Oh, the thing is, U.S. housing market has been on a downtrend probably since year 2006. So it's not a new news anymore. The thing is, maybe the declining trend will be in a decelerating mode from now on. So to me, that is not a big uncertainty anymore.
Okay, all right. That's Techtronic Industries then. In your long book, the next stock that is in your long book is this one, Comba Telecom Systems. Now, I hadn't heard of this until you mentioned it, and I would imagine quite a lot of people haven't heard of it either. It provides wireless enhancement products, antenna and various other services which allow mobile operators to operate. Profit last year up 17%. It beat estimates. There are 8 buys to 1 sell, so analysts do love it at the moment. Where's the upside in this stock, though? I mean, what do you like about it?
It's the market leader in this space, and it's going to be a clear beneficiary of the 3G spending in China. I expect the company to have 40–50% CAGR growth in the next 2 years, and the stock valuation is only at less than 7 times PE, and it's now at net cash. So I think it has very high earnings visibility, and yet valuation is still very compelling. I do see room for more re-rating.
Will it definitely benefit from 3G? I mean, we don't yet know exactly who's going to be getting what contracts and what value.
Well, first, it's the market leader, so it will definitely get some share of the increased 3G spending. In fact, it's quite a dominant player in its own space. In fact, the company has already receiving orders related to 3G spending. So I think that trend is very clear.
Okay. Once again, it hasn't gone unnoticed. The stock has doubled year to date. It's up about 99% up to yesterday's close. But again, estimated PE 8.6, estimated price book 1.3. You clearly think, even after doubling, it's still cheap.
I think, yeah. Many industrial companies still have room for a re-rating because they all come off from a very, very, very distressed base. That's why you see them doubling or tripling. But
how much upside on this one, though? The median target price is 338. That's about 12% upside. But how much do you think we could get out of it?
I think we can easily get another 30–40% upside if the company keeps delivering.
Okay, all right. Let me summarise what your shorts and longs are telling you at the moment. This is Lillian Co's recommendations at LBN Advisers. We have 2 shorts. Let's start with the long, shall we? Yeah, why not? Summarise those. There we go. Techtronic Industries and Comba Telecom Systems, 669 and 2342, both listed in Hong Kong. On the short book, we have Shanghai Electric. And we also have Hong Kong Exchanges and Clearing. Hong Kong Exchanges 388 HK and Shanghai Electric as power production declines in China because the economy is slowing. 2727, both listed in Hong Kong, both in the short book as well. Just before you go, tell me what the market is like at the moment for fund managers.
I think we are seeing a lot of volatility around because macro trend is still quite unclear, and yet we are seeing all these stimulus packages from various central governments. So market is very jittery on either direction. So that's why I'm still running a relatively neutral book although with a long bias, because you just don't know when the market decides to go up or down. But I think as we move into second half, the trend will become very clear. First, the year-on-year comparison will definitely look better in second half, and the positive benefits of the stimulus packages will definitely be felt in the real economy in second half. So I think I will turn to be more aggressive in building positions as we move to second half.
Okay, Lillian, thank you very much indeed for your time today. That is Lillian Co, Chief Investment Officer at LBN Advisers. Coming up, this company, 150